Rise and shine.
Welcome back and thanks for staying tuned. Of course, we're moving on with the extension of time and Rise and Shine this morning. And we're being joined by two financial and tax experts this morning to look into the proposed tax bill sent by the federal government of the Tinubu-led administration to the National Assembly. Like I said earlier, it has gotten a lot of kickbacks from northern governors. But the question would be, why has the South and the East not, joined in that particular kickback for the bills? What are the bills particularly about, and what are the dangers looming ahead if it is passed into law? I have Mr. Abel Udi, who is a financial expert and a tax expert, also joining us this morning from the city of Uyo. Good morning, Mr. Udi. Good to have you on Rise and Shine.
Good morning. Thank you for having me.
Good morning. Thank you so much for joining us. We also have Mr. Lekon Ayinde. He's also a financial and taxation expert, joining us from the city of Uyo also this morning. Good morning, Mr. Ayinde. Good to have you on Rise and Shine. Hello, good morning, Mr. Ayinde. Good to have you on Rise and Shine.
Good morning. Good to have you. Thank you very much.
All right, then. So let's delve quickly into the conversations. We have two experts in the industry on the show this morning. So let's try to break down. I know that at this point you have been privy to the tax proposal by the federal government. First of all, before I begin to break down some of the clauses in it, what were your thoughts having read through that particular bill? I'll start with you, Mr. Odi.
We cannot claim to desire devolution of powers and fiscal federalism, and also not create an avenue for states to be productive. At the same time, let them earn or take a premium for their productivity. So I think, in fact, the turning issue, you understand, should not be a turning issue at all if we are all lovers of productivity. I think that's my take on the core issue regarding these new tax reform bills.
Are you of the opinion that this particular tax reform bill it's actually geared towards the productivity of the Nigerian economy?
Now, let me be frank with you. If you take the Swiss government, which for me I like to quote as a very perfect example of a fiscal federalism, you'll see that the Swiss government even went far to say, look, in terms of company income tax, that states have the power to levy company income tax, while the federal government also levies a particular up to a maximum. Now, what that does is that it allows states to drive investments, and when you drive investments, you know that you could take company income tax and you also put them in public, into public expenditure, social services and the likes, and everybody is happy. But in Nigeria, where we have this form of federalism where the federal government collects taxes and shares to states irrespective of productivity or no productivity, I get money at the end of the day. States, what we have as state governors are governors who are just managers of resources. It's not that productive. And it also does not encourage investment. If, for instance, I'm in Akwa Ibom State, I'm the governor of Akwa Ibom State, and I know that I do not need an industrial layout, or if I set up an industrial layout, I'm not going to get any form of taxation for it, then why would I put my state's investment money into setting up a development zone, give companies all the incentives to come and invest in my state? So, but the moment I know I can take a fair share of maybe a company's income tax from a company, I will ensure that I have like 30 or 40 world-class companies in my state so that I can get enough money, to take care of my people. You understand? So these are the kind of things that the tax reform bill is seeking to right. You understand? Because that is a situation where governors, some states in the north, frustrates investment, or even in the south, nobody's thinking of investment, nobody's thinking of job creation, nobody's thinking of the potential impact of taking advantage of the people to produce and export. But what we do is that there's going to be oil revenue, and there's going to be a VAT, maybe Lagos State, Rivers State, and Abuja will generate VAT, and they're going to share this VAT on the basis of land mass or population and some frivolous basis. I think we should move away from that if we truly want a productive Nigeria.
Okay. Of course, I have a follow-up question.
That's my take.
So I have a follow-up question with regards to that, but let me go to Mr. Ayinde immediately. Let me take your holistic thoughts, your approach to the bill. Mr. Udi has given his points. He thinks it's a productive, something that can drive productivity in the country. But what are your thoughts, having looked into the details of this bill?
Okay, yeah, thank you very much for that. I think in the long term, it's something that should drive increase in tax generation and collection across Nigeria. However, I think where the problem is for many states, especially the northern part of Nigeria, where they struggle with population growth, and the growth in economy is not in line with how much or how far they grow in terms of their population. Now, take for example, I saw that the problem many of them were trying to highlight is the fact that they're going to be sharing VAT based on derivation. Now, ideally, VAT has been shared in Nigeria principally through the tax offices we have and the states where companies are headquartered. But now there is a change to that whereby you have to justify why you have to take what you're taking from tax. And I get it. Yeah, the federal government is trying to drive the fact that we need to be more productive. You can't just sit down and say whether I work or I don't work, I'm going to have money. For example, there are states where they are not allowed to sell alcohol. They arrest their citizens for selling and buying alcohol. However, they take VAT whenever the federal government shares VAT on alcohol sold in Nigeria. For me, if you are going to go the religious way, why don't you go 100%? Don't share out of the money of alcohol since it is against your religious stand. There are states who are investing heavily in these things. Why are you sharing with them? I get that, and I totally agree with the federal government. The only problem I think this is having is the fact that maybe we should have prepped states. Okay, in the next 6 months, in the next 1 year, you need to drive investments in your states because we are moving away from this basis of sharing our VAT. And if you don't have anything to show for it, you're not. Because they feel like all of a sudden the federal government is waking up and implementing a law that will start in 2025. Meanwhile, it takes a period of time before you are able to bring in investment, before they start producing, before they start making money, before they become profitable. And I think that's where the problem is for them with this.
Okay. So one of the key concerns that we're also having is the fact that taxation is, the way it's calculated, because one of the questions that the northern governors were asking is, on what basis, what's going to be the percentage basis to share this, VAT? And the question here is most businesses have their headquarters domiciled in Lagos. So most of the returns of, even when, for instance, I will use the oil and gas industry, for instance, we have a lot of them doing their drilling and businesses in Akwa Ibom, in Rivers State, in Bayelsa, but they have their headquarters domiciled in Lagos State. It means that whatever business is done in Akwa Ibom or all of these oil generating region, the tax is all sent to Lagos before it is now centrally divided and sent to other parts of the country, which also means that Lagos State gets a bigger chunk of what the generation, the tax generated is, as opposed to the fact that they might not actually be doing all the work. Now, these are some of the concerns that are embedded in this, tax reform on one of the legs of the four. What's your reaction to this, Mr. Odi?
Okay, yeah.
Okay, go ahead.
Okay, so I heard the presidential head on tax reform, Mr. Taiwo Yedele. He said something. He said it's not just based on the states where they are headquartered, and he said something that it's going to be shared based on consumption too. And he gave an example. Say, for example, the telecommunication firm, depending on how many subscribers they have in a certain location, the VAT they generate is going to be shared based on the number of subscribers they have. And for me, it's not just in services now, it's in consumption. I think if people sit down and look at that bill or that law, they will see that, okay, in some areas it may look like it's going to affect me negatively. However, if you look at it critically again, it's likely going to affect everybody the same way, depending on how much of consumption they are having going on in their state. Now, the question would be, how much of disposable income does various states in Nigeria have, apart from a couple of performing states like Lagos, Rivers, Ogun, Akwa Ibom, and a few other outlier states in Nigeria? And that's where I think the problem is.
Okay, Mr. Odi, let me come to you and take your reaction, based on that same question also. Domiciling of headquarters and how the sharing formula is. That's one of the, the biggest concerns of the northern governors. What do you think that the main concern should actually be? Mr. Odi, do we still have you? Okay, I think
the critical issues are this. VAT is a consumption tax. You understand? So what the northern state governors should do is to first and foremost agitate that the infrastructure to collect taxes at the point of consumption, should be improved. You understand? And such that taxes that are generated from my environment, my immediate environment, can be captured and I derive value from them. You understand? VAT is a tax along the value chain, and the ultimate payer of VAT is the final consumer of a product or service. So I think what the northern governors are agitating for me, it's not an issue basically, because if we are going to have this change, the Nigerian Revenue Service, as new FIRS we called, so we also improve its infrastructure to ensure that when a bottle of Coke is taken in Uyo, you understand, it's captured for Uyo and not captured for Lagos. You understand? The argument that VAT are remitted via the head offices of company, for me, it's a no-brainer, because in Uyo, for instance, in Uyo now, for projects that are done in Uyo and for services that are rendered in Uyo, the VATs are actually paid through the Federal Revenue Office here in Uyo, not the head office of any company. For instance, even as in the banks, when VAT are taken from transactions, from loans and advances, those VATs are remitted to the FIRS office at the relevant tax office closer to where the transaction was done. So I think the issue is not a major issue. And also, we should also look at the bill, and look at the components of it. The federal government has ceded 5% of its share to state governments. Previously, the federal government takes 15%, states take 50%, and local government 35%. Well, now the federal government is saying, I'll take 10%, state gets 5%, and local government will take 35%, which means states have more revenues to share. But what is going to happen is that states should now drive more consumption. You should be able to drive the economy of the state so that people will spend more. And when they spend more, you can take more taxes, and you ensure that the right collections are done from those states. I'm not coming with arguments that are bordered on inefficiency.
Okay, so we are still looking into the nitty-gritty of this particular bill, because on the one hand, it looks like we must acknowledge the fact that the Oyedele-led team actually did do a holistic work in reviewing the taxation policy of Nigeria, and they've also tried to unify the tax window. But I think one of the major concerns is how this streamlines and puts out regional economic strength. So it looks like the northern governors are fighting for their regional economic empowerment, whilst the southeast and south-south governors don't seem to be speaking up. Do you see a problem, coming up in the economic space, southeast, south-south, if they do not speak up in this concern? Now, part of the conversation is, have our governors put together the likes of you as experts in the industry to interpret this law and tell them where they should put their legs and where they should actually say no on the bill. Remember that the bill has been retracted by the federal government to be reviewed and re-presented to the National Assembly. Mr. Inde.
I think this is not a time for anybody to keep quiet, especially regional governments. For me, if you look at it holistically, it pays in the long term if duly followed and properly implemented. Now, the question will be, how does this affect me in the short or medium term as a governor maybe in the South region or the Southeast region? And I guess maybe it wouldn't affect them in a big way. That's why they are not really talking now. But for me, I think much should be done in terms of, okay, how does this affect what I currently take? How does this affect what I'm going to be taking in long term? And it still comes back to the question of how much of IGR are states doing? When the last time I checked, not so well in terms of how states have developed their IGR. Everybody is just sitting down for the end of the month to see what is coming from the central, pay salaries, do a little bit of construction, and keep the rest in bank. Now, with the way we are going, we will have to get to that point whereby states would have to be sustainable themselves. Yeah, money is coming from the central, but what are you doing with the resources you have with yourself too? What are the policies you are putting in place to ensure that people are investing in your state so that you can increase your VAT, you can increase your IGR? Those are the questions I think they should be asking at the moment.
Okay, so let's talk about the key indices of this particular bill. We have the streamlining of the taxes. We also see that the proposal looks to create a niche for digital revenue collection. That's something that they intend to do. Now we're seeing that they want to create a more efficient system and reduce the risk of tax evasion in Nigeria. Like I said, sub-clauses that we may not be looking at in the tax proposal. We also have tax to GDP ratio. Now, the federal government is looking to increase the tax to GDP ratio to at least 18% within the next 3 years, from up to 10.86%. Now, let's talk about those first three first before we look at the rest. Streamlining of taxes, digital revenue collection, and especially now tax to GDP ratio. Let's break that down from a professional perspective. Mr. D, we'll start with you. You take the first three.
We can achieve the tax to GDP ratio that the federal government is anticipating without digital collections. The federal government is looking at 18% tax to GDP ratio between now and 2026. And if we want to achieve that, we must be able to capture our taxes, our tax expectations by using digital services. And one of the examples is to look at use tools like the BVN, tools like the NIN, which is currently ongoing. A lot of banks are updating accounts with them. They are saying their BVN and their NIN. So this enables you to drill down what each and every person in the economy is earning and what are the taxes this person is paying. So maybe in a very short while, you begin to see mails in your email. Hello, can you hear me?
Absolutely, we can.
Yeah, in the short while, people begin to get emails in their boxes telling them, look, you've earned this, you've earned this, you've earned this, and you are yet to see any form of returns on your part. So that, I think, for me, is the use of technology, to ensure that people are actually making money in the economy and they're not giving back to the economy, so that we can now pay for more social services. And achieving the tax to GDP ratio, for me, it's a great, for me, if we can achieve it between now and 2026, it's a good one, because states and federal government will have more money to toy with, and we will now begin to demand accountability from them. That you are taking this much from us. What exactly are we getting in return from it? Because right now, our tax to GDP ratio is very, very low. And that's why if you look at the report, the financial report of the federal government, you can check on the CBN website. Every month, the federal government is in red. Most times if you look at what the resources from VAT and FAC allocation that goes to the federal government, it's not enough to even cover recurrent expenditure. That's why the federal government keeps borrowing to finance projects. So, but if we could get in raking more through taxes, we'll be able to do more. And if state government were to put in more effort to drive investment and not just to receive money, the federal government also get a fair share from these revenues, and will be able to do more social services for the people. So for me, I think I'm in sync with the intent of the bill. However, regional governments, you pose the question what it means for regional government. Regional government should not begin to look inwards. For us in the southeast, we should look at our areas of comparative advantage. Our area of comparative advantage might not be VAT. You understand, especially with the agrarian states, Ebonyi and some other states, it might not be taxation. In some states like Delta, for instance, it might not be VAT. Then we can also look at our legislature and say, look, we've been enjoying 13% derivation since 1999. I think it is time we increase our derivation, for instance, to 25%, so that we can actually benefit from the devolution of finances, fiscal federalism. So I think we should not restrict this to the issue of VAT alone. I think every state that has some resources should be able to demand more for the exploitation of these resources. While in the north as well, that has a lot of solid minerals, they should demand more for the solid minerals and putting money where in the mining of these resources and derive revenue from it. Because we have a population of 200 million people, and we need to feed them, we need to police them, we need to educate them. And people need to earn living wages, and these things cannot come by mere wishful thinking. So I think we should all support this tax reform bill. And in fact, the northern governors actually used a term that is wrong. The term the allocation mechanism as a derivation. It isn't derivation. It is a consumption-based allocation principle. You understand? We are sharing VAT on the basis of what consumption. So if the Lagosians are consuming more and generating more taxes, they should get more. You understand? If your people are not consuming enough, do you understand? Then you need to stimulate your local economy so that they can generate more. And if you can't do that, then you look at solid minerals, you look at other areas, you look at agriculture. You can decide to come up with haulage tax. You can decide to do anything, and you can make your money. You can make money from it. So I think that's my position. I think the resources are there, the solutions are there to generate to capture taxes. We have the BVM, we have the NIM, we have the thing, and I think it is in the next 2 years. I think we should be able to see an improved tax collection mechanism that will steer us towards the 18% tax to GDP ratio that the federal government has proposed.
Okay. All right. I would have had one more question, but then we are pressed for time because maybe a lot of Nigerians will not agree that we're not generating enough tax. The FIRS at the end of the year would quote how much room they have made with regards to collection of tax, looking at the several windows. But maybe that's a conversation we'll have at a later time. But let's finish up on this, the nitty-gritties of this bill. Mr. Ayinde, we have the fact that this proposed bill is looking to reduce tax incentive. That's cut back on incentives that have cost the country over 6 trillion naira annually. So they're looking to cut back on that. We also see voluntary assets and income declaration, a scheme that they seek to bring forward. Presidential Committee on Fiscal Policy and Tax Reform, of course, chaired by Oyedele. We've already talked about the relinquishing of the 15% they usually got. How do you think that we can achieve this in the best interest of everybody?
Okay, yes, like you rightly said, a lot has to be done technologically. Our tax system in Nigeria is hugely fragmented and it's not sustainable if we have to do well in it. So yeah, if we are looking at increasing it, then there has to be a central or a focal point by which we get these things organized at the onset. So yeah, and secondly, yeah, we have a lot of wastage in our system. I mean, when we analyze or we do tax manually, it doesn't present the best option we have. So I think for me, we have to get to that point where we do it centrally and we do it with the use of technology. And like you rightly said, we have all the tools at our disposal, the BVN, the TIN, and every other thing. I think it's the willingness and the transparency of the systems involved that we now have to fine-tune as we go on. Because there are cases of, you see people where they get taxed illegally and they tell them, oh, you show up, and there are talks of, oh, if you can do this, this can be reduced. But if it is done via technology, I guess this would eliminate every excess in this system. Yes, asset declaration and every other thing, yes, we can go a long way too by doing that in terms of what we... I realize many times in Nigeria, we evade tax through, how our system is being run. And any serious government would look into the loopholes involved with their taxation and the processes involved and try to make things work. Ideally, it's only in Nigeria you sell your vehicle, a second-hand vehicle from yourself, you sell to another person, and all the proceeds go straight to you, whether it goes into your bank account or the cash. You don't pay anything on property, you don't pay anything on transfer, nobody knows what you do. I think the only area where the government knows you've done something is maybe it's a landed property or something. I think more has to be done in terms of asset declaration, what you currently have, so that in case there is a change, in assets, there is a movement, the federal government is able to know that, okay, from the proceeds of what you've disposed of, we are able to get something. And
Okay. I don't know, we seem to have lost this audio for a moment. But, of course, we've been speaking to two financial experts across the tax window, Mr. Abel Udi and also Mr. Lekon Ayinde. They seem to both agree that the tax reform of the federal government would be in the best interest of the nation if properly implemented. So, maybe our state governors should review the agitations that they have against the bill. But I must say a big thank you to both our guests for coming on the show this morning and giving us great explanation as what to expect with these bills. Thank you very much, gentlemen. Well, if we can't say their thank yous, we are about to shut down, and that's the much we can take on Rise and Shine this Monday morning. Thank you so much for being a part of the show. Let's take the best choices for ourselves as individuals, Nigerians, and a people. My name is Uyai Emem. Good morning.